Good morning, everybody. Hey, hope everybody's doing well. Had a great weekend as we head into this first full week of March, and we'll see what the markets are looking like. We had the last couple of days of last week look pretty good. We'll talk about that and more when Dave joins us here in just a few seconds. Hey, before we do though, let's not forget it's been a little while since I've been with you, so let's not forget that in this world we live, there are very few things that you and I can control. But we can control how much risk you have in your portfolio. And that's why I developed the core retirement design to help you through that process. Give us a call at 863-382-0037. Schedule your core retirement design. Hey, we like that. We got Dave coming up next.
.7 Light FM. That's John Cougar Mellencamp there. I'm at 70 degrees now. That's good news. Pea soup fog, that's not the good news. We're at 8:40 now, 20 before 9. Time checking on your money and find out how your IRA and 401k are treating you. It's a usually quiet Monday. However, Phillip Statler is back with us from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you today?
Good morning, Dave. Hey, doing well today. It is, hey, welcome to the first full week of March. Let's see what it has to deliver for us.
It could be interesting. You were gone for the last couple of days of last week, and I thought maybe filling people in that that a skilled financial advisor does a whole lot of things, and sometimes it's just talking with your peers, and that's how you spent a couple of days at the end of the week last week, didn't you?
We do. I belong to a mastermind group that meets usually twice a year, and then we have Zoom meetings in between. But 18 advisors in a room, really working on issues of running a business, customer service, how to do better things for your current clients, and be more efficient and effective. So it's always good to get together and just kind of brainstorm ideas and put together some things that make us better advisors and help us do a better job for our clients.
Understood. Are your peers banging their heads against the wall with the way the markets have gone for the last few months, just like the rest of us are?
Yeah, they have their ups and downs as well, but most of them are doing pretty well with the strategies that they put into place.
Understood. And that's the point. Having a strategy and a plan, you insulate yourself from the weirdness of the market the way it is. There have been so many mornings I've opened up the microphone in the morning and said, boy, about the only people that made any money the last 24 hours anywhere were the people who bought the VIX. It's just one of those times, isn't it?
It is. It's, the last year and a half now have been a little bit tricky to kind of navigate through, but it's one of those things you have to do. And I would just historically, what hasn't worked that I've seen is kind of buying and holding. And that's what a lot of folks do through this. And I learned after the 2000 bear market that, tactical is what you have to be to weather these kinds of storms that we have right now.
Understood. That experience, when you talk all the way back to 2000, one of the reasons why going to an advisor hits. I was giggling with you when we first got on the phone. One of my tip sheets written by decidedly younger people. The lead-in line is, "Gosh, I think the market has a case of the blahs." What was your first clue, kid?
Don't we all?
Okay, absolutely. Yeah, it's going to be a busy week and a busier second, mostly first full week that we normally would have, because the way the month began, we didn't get our usual flood of unemployment information last week like we normally would on the first Friday of the month. So in addition to the stuff that normally gets scheduled during this week, we're going to get a bunch of employment stuff as well, and it's going to kick off. The flood of stuff is going to come when Jerome Powell ends up getting hauled before the Senate tomorrow and gets to explain what the heck they're doing. And that's entertaining might not be the proper term, but there's definitely going to be some fireworks, because neither the Democrats nor the Republicans like what he's doing lately.
No, they don't. So that's going to be the first thing that happens tomorrow. Before that actually hits, though, we got factory orders will come in this afternoon, later this morning. And those are expecting to be down. At least that's what my numbers are showing. Tomorrow should be interesting because we get wholesale inventories. I'm not so interested about that, but consumer credit comes out tomorrow afternoon, and it's expected to more than double what it was last month. And that intrigues me because it kind of goes along with what I've been saying, that that's how people have been getting along with this inflation, is they've been using the credit cards. And we're talking about, I mean, the expectation is for about a $14 billion increase in consumer credit.
Which is really a bad bellwether to see if it actually goes up that high. I think it was last week or the week before I mentioned that I'm sitting there and I've got pretty decent credit lately. I get one of those pre-approved offers in the mail talking about how because you're so good, we'll get you this really fancy pants credit card. And I noticed the interest rate on the dang thing was up to like 34% if you carried a balance. And I was saying, geez, what would it be like if I had marginal credit?
Yeah, really.
The credit card rates respond a lot faster and a lot more cartoonishly much than the mortgage rates do. We're talking about 6% mortgages, but if you can find a credit card with a 20% carried rate on it these days, you're actually doing awful doggone well because those rates just skyrocketed with the interest rate.
Absolutely did. Right. They did. And so that number to me is going to be telling as to, to show how people have really survived through this inflationary period.
Exactly. And the problem is you carry a credit card balance with those interest rates going up. The odds are you're not going to survive if you depend on that for long because the carrying costs have just gotten utterly obscene. Friday was a pretty doggone good day and a surprisingly good one, as a matter of fact. By the time we were done, the Dow was up by 387. Standard & Poor's was up by 64. NASDAQ was up almost a full 2%. Up 226 points. Was it just bargain hunting, according to your read, or was something else going on that actually gave us reason to be optimistic? Everything pretty much was an even climb through the day. There weren't any shock value numbers that had big upticks.
Yeah, I mean, I did not see anything come across any of the tickers that I watch or any of the news sources that gave me any reason for the optimism we saw on Friday.
My read was just kind of after we've been kicking people where it really hurts the most over the last week and a half or so. Before that, finally, a whole bunch of computer traders and individuals found some bargains that they thought were undervalued and just bought them. So we had a kind of an adjustment upward on Friday. It's looking kind of quiet today, and I'm kind of sensing some tentativeness ahead of the flood of reports we're going to get this week. But I know a lot of the traded issues, well, they're not reporting today to speak of. We got a whole bunch of guidance changes and re-ratings coming out of the market that are kind of interest, aren't they?
Well, we've got a couple things that are happening right now. I mean, the markets are gradually moving up right now based on what you're seeing on the delayed quotes. They're almost double what you're seeing there to the upside, which is good news. Looking at it, you're right. There's no really earnings out right now, but we do have the home builder market is probably getting hit the hardest right now. They're getting some downgrades. JP Morgan downgraded KB Homes, and it was a double downgrade, which is not good. They went from overweight to underweight, and so they're trading down about 2% based on that information. And JP Morgan, I guess they must be really looking at the home builders, because then they went out to DR Horton, another home builder, and they downgraded them from overweight to neutral, and affected their pricing as well today. They're trading. Let's see where they're trading here. They're trading down about 0.9% right now. So both of those downgrades are really affecting the home builder market. I was trying to see if there's. Go ahead.
I was going to say, if I remember correctly, the home builder publicly traded companies, the reports that we had from last quarter really weren't all that bad, but we got the traditional marginal guidance and don't expect great things this year out of them. But their past performance indicates they can make money even in a declining market. So a double downgrade is really a surprise.
Well, it is, and I think it's got to do with maybe some market share. Obviously, interest rates going up is not helping that industry as well. So the other one I have for you, though, I don't know if it was really an upgrade or downgrade, but Goldman Sachs which is kind of curious to me. They initiated coverage of Apple. So I guess they hadn't really been covering Apple. I thought everybody covered Apple, but I guess not.
That was my first reaction when I saw it hit my stock ticker. What do you mean they're just starting now? They hadn't noticed Apple before?
They put a buy rating on it, and they expect a price target, they're saying, of $199 a share, which would be more than 30% above where it is right now. And so, Apple's getting probably a little bit of a push from that this morning, because you got people out there now buying based on Goldman Sachs recommendations. So they're up almost 1.9% this morning.
Cool. I gotta believe that there's a lot of bargains to be found in the tech stocks right now, because they've really fallen out of favor on a short-term basis, and I don't think we're going to be getting out of the computer business anytime soon.
Nah, I don't think so either. I mean, I think tech is here to stay, Dave.
I expect so too, which kind of means when the whole sector falls out of favor, there are bargains to be found there, and Apple, being the big kahuna of the bunch, probably is the poster child for that.
Yeah, yeah, them, Google, all that whole group of FANG stocks definitely will have been beat up quite a bit last half of last year and this year.
Understood. So just to get the week together again, I'm going to assume that means we're going to have, like, this week is going to act like last week should have been. ADP comes out with the private sector on Wednesday, first-time claims on Thursday, and then the big kahuna number for the overall unemployment rate on Friday. Any changes from that we can expect?
Nope, that's what I'm looking at right here is exactly that.
It's going to be a busy week. Resetting the table up day on Friday, surprisingly so, with no particular news-based reason why. 45 minutes before we open, you're alluding to the fact that things are actually getting a little bit better from my delayed quotes. How are we doing 45 minutes before the opening?
Well, actually, they've kind of oscillated back down to pretty close to where your delayed quote is right now. We got the Dow right now at about $50, which is in between a tenth and 0.2% up. S&P 500 is up 0.25%, and the NASDAQ 100 is up a little over 0.4% this morning. On the other side, we've got silver basically flat right now, gold up a little over 0.1%, and crude oil is down almost 1.2%, but it's still up a lot higher than where it was when I left on Wednesday, Dave. It's at $78.76 a barrel.
I think it's fractionally up over where it was on Friday when I gave the numbers as well. Been the low 78s as I recall, but it's not a sea change type of difference from then. We're pretty well flat comparatively. Overseas markets, mixed bag in the Asian rim. The Hong Kong index was up fractionally. Chinese mainland index was down fractionally at 6 a.m. this morning, and I'm talking about very small fractions here. European markets, the mainland German and French markets are up by the better part of 0.5% halfway through their day. British markets are off by about 0.5%, so I really don't have a direction overseas either this morning. You communicate with the other advisors around the country. You keep your trading up. If you want up-to-the-minute information and up-to-the-minute guidance as far as how to make a retirement plan hold, stick, and actually take effect, I need to talk to you. How do I find you on the phone to get an appointment, Phillip?
Then give us a call at 863-382-0037. That's one of the reasons all this ups and downs that we're seeing right now. The closer folks get to retirement, the more important it is to level those things out and to be prepared for a downturn before you retire. That's why I developed the core retirement design to help people design that retirement they always dreamed of. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday on Highlands News Talk 730 and 95.3 FM.
And the two of us back together again tomorrow about the same time, maybe with some rumors as to what Powell is likely to tell the Senate tomorrow, right?
Well, there won't be much else. We're going to have to be looking for rumors and upgrades and downgrades because I don't think there's much in the way of earnings coming.
I'll pick up a couple of supermarket tabloids. Have a good one, sir. I'll see you then.
All right, man. Talk to you tomorrow.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, remember that the closer you get to retirement, the more risk plays a vital role. Give us a call. 863-382-0037. Let's find out how much risk you have hiding in your portfolio. And then, hey, join us again tomorrow morning, same time, same place. Until then, Have a great day.